The fall of gold and the rise of gemstones as investment assets. For centuries, gold was the unshakable bedrock of wealth. It backed entire currencies, fortified empires, and defined economic power. When markets collapsed, investors ran to gold. When currencies failed, they turned to gold. But now, something strange is happening. The ultra-wealthy, sovereign funds, hedge fund managers, and even central banks are quietly pivoting to something more rare, more portable, and in some cases, more profitable than gold. Gemstones, not just diamonds, but vivid rubies, untreated sapphires, emeralds, and a select few stones rarer than even platinum. So what's going on? Why are investors turning away from gold and putting their wealth into colored stones? Today we uncover the hidden financial revolution happening beneath your feet. 1. Gold, a safe haven with cracks. Gold has always been a symbol of stability. It doesn't rust, it doesn't corrode, it isn't printed like money, and it's universally recognized. But here's the hard truth. Over the last decade, gold's inflation-adjusted performance has underwhelmed. Between 2011 and 2021, gold remained flat, hovering between $1,200 and $2,000 an ounce. Meanwhile, equities, real estate, crypto, and even farmland significantly outperformed it. More importantly, gold has become increasingly vulnerable. In times of high inflation, gold no longer moves as strongly as it used to. Central banks now have digital tools and inflation hedging mechanisms that reduce reliance on physical bullion. And, crucially, gold ownership is traceable. When you store gold in a bank or fund, it can be frozen, it can be tracked, it can even be confiscated in extreme legal cases. And for many ultra-high net worth individuals, that's a problem. 2. Enter the untouched asset. Gemstones. Gemstones are among the most ancient forms of wealth storage known to man. The Mughals, the Pharaohs, the Vatican, the British Empire, all built gem collections, not just for beauty, but to protect and pass wealth. Why? Because gemstones tick boxes even gold can't. Let's break it down. Rarity. Gemstones like untreated Burmese rubies, Colombian emeralds, or Kashmir sapphires are geologically finite. Some mines are already depleted. No new supply is coming. Portability. $1 million in gold weighs nearly 15 kilograms. But a $5 million ruby? It fits in your pocket. Privacy. Gemstones don't require registration. They don't sit in financial databases. They're discreet, untraceable, and off-grid. Tax protection. In many jurisdictions, gemstones avoid inheritance tax, wealth tax, and capital gains reporting. And unlike gold, whose price is largely dictated by market sentiment and monetary policy, high-quality colored gemstones are driven by pure supply and demand. 3. The billionaire shift. The first major wave of gemstone investing began quietly in the early 2000s. Private bankers noticed that their wealthiest clients were no longer buying just gold bars or Swiss accounts. They were buying color. In 2011, Elizabeth Taylor's jewelry collection, rich in rubies and emeralds, sold for over $137 million, shattering records. In 2015, a 25.59-carat Burmese ruby, known as the Sunrise Ruby, sold for $30.3 million, over $118 million per carat. In 2023, a rare emerald from Colombia fetched $55 million at Sotheby's, more than 12 times its estimated price. What's happening here is not speculation. It's portfolio diversification at the top 0.001% level. Luxury funds, private wealth advisors, and family offices are all allocating up to 5% of portfolios into investment-grade gemstones. In fact, a UBS report in 2022 showed that colored gemstones outperformed gold by over 60% across the previous 15 years when adjusted for size and rarity. 4. What makes a gem investment grade? Now, before you go buying crystals online, understand this. Not all gemstones are equal. Most are not investment grade. Here's what top investors look for. 1. Origin. The source of the stone matters. Burmese rubies, Colombian emeralds, Kashmir sapphires. These have historic value, tight supply, and global recognition. 2. Treatment. Untreated stones command 3x, 10x more value. Most commercial gems are heat-treated or fracture-filled. Investors want untreated certified specimens. 3. Certification. Stones should be accompanied by GIA, GRS, or SSEF lab reports. These verify authenticity, treatment, and origin. 4. Color and clarity. The market demands vivid, saturated colors, not pale stones. For rubies, pigeon blood red. For emeralds, vivid green. For sapphires, royal blue or cornflower blue. 5. Carat weight. Stones above 3 carats with perfect quality become exponentially more valuable. A 2-carat untreated Burmese ruby might cost $50,000, but a 10-carat? That's a multi-million-dollar gem. 5. Supply is disappearing. One key reason investors are turning to gemstones is simple supply exhaustion. The legendary Mogok mine in Myanmar, home to the world's finest rubies, is now producing less than 5% of what it did 30 years ago. Kashmir's original sapphire mines, long depleted. The few remaining stones are auction only. Colombian emerald mines are producing, but illegal mining, environmental regulation, and cartel influence have cut production by 40%. Meanwhile, demand, especially from China, India, and the Middle East, is exploding. Millions of new millionaires in Asia are now competing for a shrinking global supply of top-grade stones. And unlike tech stocks or commodities, you can't make more Kashmir sapphires. When the mine is gone, it's gone. 6. The untapped advantage: portability, privacy, permanence. Here's a scenario the rich quietly prepare for. What if your government freezes bank accounts? What if you need to cross a border in a crisis? Try that with real estate, or even a kilo of gold. Now try it with a $2 million ruby sewn into your coat lining. Gemstones offer silent sovereignty. They're not tracked, they're not regulated, and they've survived regime changes, revolutions, and wars for 5,000 years. In fact, during World War II, many Jewish families escaping Europe carried gemstones across borders when their bank accounts were seized and gold was confiscated. Even today, many governments don't classify loose-colored gems as monetary assets, giving investors loopholes for discrete inheritance and offshore wealth storage. 7. Not just wealth, but identity wealth is no longer just about safety, it's about symbolism. While gold is standardized and generic, gemstones are deeply personal. A ruby tells a story. A sapphire has provenance. An emerald can be traced to ancient kingdoms. Today, gemstones are becoming status assets, like vintage art, wine, or rare watches. Collectors compete not just for value, but for legacy. This emotional element adds resilience to pricing. People don't fire-sell heirloom rubies in a market dip the way they dump stocks or crypto. That's why many private banks now recommend gemstones as part of generational wealth planning. The story of gold is not over, but the era of unchallenged dominance is. As the world moves into a post-fiat, multipolar, volatile economic age, the ultra-rich aren't just diversifying, they're transferring from the metal of kings to the stones of empires. Next, we'll show you exactly how this market works, what kinds of gemstones are driving 5x, 10x returns, and how you can safely enter the world of gemstone investing, how the gemstone market is quietly outperforming gold. Previously, we explored how gold's reputation as the ultimate safe haven asset is fading. Now we dive deeper into the gemstone market, a niche once reserved for royalty and collectors, now rapidly becoming a go-to investment for the ultra-wealthy. So why are colored gemstones outperforming gold? And how can you start investing without falling into traps? 1. Performance breakdown. From 2005 to 2023, gold grew approximately 330%. Not bad, but here's what happened with certain gemstones during that same window. Burmese rubies, 300%, Kashmir sapphires, 900%, Colombian emeralds, 700%. Unlike gold, which reacts to inflation and geopolitical events, high-quality gemstones are driven by rarity and collector demand. Auction records consistently show rising per carat prices, especially for stones above 3 carats. 2. What makes a gem investment grade? There are thousands of colored stones, but only a few are considered investment grade. Here are the non-negotiables: origin, Burmese rubies, Colombian emeralds, Kashmir sapphires, and Sri Lankan Padparadsha sapphires carry historical value. Treatment: stones must be untreated. Treated gems have limited resale value. Certification: must come from a reputable lab like GIA, SSEF, or GRS. Color and clarity: vivid saturation and minimal inclusions are essential. Carat size: stones above 3 carats are more valuable and rarer. 3. Portability, privacy, permanence. A single untreated 5-carat ruby can be worth $1 million unless it fits in your palm. Unlike gold, gemstones are easy to store, easy to move discreetly, immune to government seizure in many jurisdictions, often untaxed when passed down through inheritance. This is why the wealthy use gemstones not just as investments, but as discrete stores of value. 4. How the wealthy protect their gemstones vault. Storage: Geneva, Singapore, and Hong Kong are popular for secure vaulting, private collections. Many stones are kept in shadow collections, unseen but increasing in value. Insurance: top stones are fully insurable, with premiums averaging 1% annually. Legal trusts: gems are often held in offshore trusts, which helps bypass estate taxes. 5. Risks and red flags. If you're entering this market, avoid common mistakes: buying treated stones without disclosure, no certification from a major lab, overpaying via retail jewelry stores, falling for online scams or synthetic stones. 6. Getting started. 1. Education: read books, follow auction houses, study lab reports. 2. Budgeting: even $3,000, $10,000 can get you started with a small but fine stone. 3. Reputable dealers: work only with dealers who offer lab certification and provenance. 4. Storage: keep your gemstone insured and stored safely. 7. The future of gemstone investment. Fractional ownership platforms are emerging, allowing smaller investors to co-own million-dollar stones. Blockchain-based certificates are also gaining traction, enhancing transparency. But in the end, the fundamentals remain: scarcity, portability, global desirability. These make gemstones not just beautiful, but powerful. Gold still plays a role in global finance, but for those seeking greater privacy, growth, and legacy, the gemstone market offers a more discreet, often more lucrative alternative.